This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello. Are we recording? Yeah. And welcome to Camel Finance. I'm your boy Camel, and today I want to run through a few things that have occurred this week. Then we're going to spend a little bit of time on some charts and a bit of Bitcoin stuff in the middle as always. So let's get into today. First of all, we had FOMC yesterday, and of course, Powell came out in a purple tie. So if you know, you know, right? Purple tie means we pump, and the day that this man shows up in a blue tie, then it may well be time to leave the markets. Powell, of course, yesterday left rates unchanged, so no real surprises there. As ever, the bond market knows and understands what's going to happen with the Fed funds rate, and it was all priced in. This is now out to September's meeting, and you can see that it's roughly 50-50, which is significantly less than 75% a month ago in favour of cuts. A week ago, it was about 60-40 in favour of cuts, and now we're down to just 43-ish% probability of seeing cuts. So higher for longer, it seems. And it just kind of reminds me to remind you guys of the context being key for when rate cuts eventually show up. Okay, if they're cuts into normalisation and a soft landing and a return to baseline inflation without a recession, then those rate cuts can be extremely bullish for markets. However, cuts into a slowdown or as a recession is occurring can be extremely bearish for markets over the next 3 to 12 months. So context is key. The big question remains, are we going to be able to swerve a recession, or are we indeed heading for one in the not too distant future? This week we also had the GDP data come out, okay, which allegedly grew by 3% in Q2. So as Ben points out here, okay, show me the real numbers. Absolutely true if you ask me. And some of those real numbers are a lot worse than expected, or at least projected into the mainstream. So excluding net exports, GDP is negative 2%. Core GDP, weakest in 10 quarters. So I still make the case. We are well on our way for a recession, but time will tell, okay? That doesn't mean we have to be bearish or doomsaying for now. It just means that slowly but surely we seem to be heading in that direction. Of course, if data can change and improve consistently, if persistent back-to-back improvements in the data sets can occur over time, then we'll assess that day by day as we always do, and we'll have no problem saying, okay, we swerved a recession. These are not going to be cuts into a slowdown. In fact, these are going to be normalization cuts into a soft landing with inflation returning back to baseline and normal, and will continue to be longer and stronger for even longer. But as it stands right now, it's just not my base case. As ever, open to being proven wrong by the market, open to pivot into new data as and when it presents. But again, if you've been part of the Camel Crew, if you've been following the work, if you have any idea of the types of things we've been talking about for a long time on this channel, then you'll know the significance of what is happening in Congress or in Senate at the moment, because the Senate committee has just approved a bill to ban stock trading for members of Congress, and this bill can now go before the Senate. Okay, so we're 1 or 2 steps away. I'm not 100% sure if it's 1 or 2 steps. Maybe someone can let me know in the comments, please. But I think we're 1 or 2 steps away now from this actually being passed. Now, why is that significant to the Camel Crew? Because on this melt-up chart we've had for a long time, Congress banned from owning stocks at the potential top for this market. When this market eventually is getting ready to top, we have long been speculating they will ban Congress from owning stocks. Now, there's a couple of reasons we say this. Number one is we've already seen this before. Back here, they banned the Fed officials from owning stocks. As always, they frame it as if they're doing the public a favor. They say things like, it's not ethical. These people get to insider trade on information the public doesn't have access to and profit, whilst the retail participant doesn't get to experience and enjoy these similar types of benefits and gains. But really what actually happened back here was once they banned the Fed officials from owning stocks, okay, it was actually akin to them letting themselves out at the top before a big bear market unfolded over the following year or so. And so I have been speculating we just might see the same thing, that we get some kind of big blow off top, and then right as this thing is distributing and starting to roll over or break down from third and final angles, we would probably see them do the same thing, just this time with Congress. And again, notice the theme of this whole idea at the moment. They are talking about how it is unfair. Pelosi has made so much money from insider trading. It is unfair. Okay, it's unethical that these people are allowed to engage in insider trading legally. So they are again framing it as if they're doing us a favor. But I don't believe it. I think really what they're going to do is let them all out at the top before we have a whopping great bear market, a recession, and ultimately probably enter a lost decade. But We'll deal with the lost decade and all of that speculation much later in life. For now, the focus remains on finding the tops. Whether that's a local top or the ultimate top, I don't really care. I just want to be out before we experience another kind of significant drawdown, like this whole spill from back here, like the yen carry trade, like this dip here, right? I always want to be out the way as early as I can so that I can wait for momentum to return, new cycle lows to form, and then I can re-enter as always. So that is still the focus, okay? Long and strong for a while longer, see if we can continue to ride this blow off top, see if we can get out near enough the top to call it the top, and then as ever, we'll get out of the way, wait for the market to do what it's going to do, wait for momentum to return, and repeat this whole process all over again. But it's pretty interesting because for a long time, this stuff has been talked about, and I've often pointed at it and said, I know it sounds cool, I know it's easy to say, well, Camel, you called it, but they've got a very long history of talking like they're going to do this and saying that they should ban congressmen in stocks, but nothing ever comes from it. And you can Google this kind of headline and go back years into the news, and you'll find that they've been talking about this since like 2017, 2018, 2019. Every year they mention that they really ought to ban Congress from owning stocks, and they've never actually done it. However, we now actually have concrete proof that they are at least moving towards doing it. Now, that doesn't mean they're going to do it. Doesn't mean it couldn't get rejected at the next Senate meeting or whatever. But it does mean for the first time in many years, they've gone from talking about it to actually taking action. So super interesting times. It's certainly going to be something I continue to monitor on this channel. And if they do ban themselves from owning stocks as we're breaking down from third angles and starting to fail cycles and confirming trend shifts, then I am going to take that as a signal that that top is probably more than just a local top. Again, in the short term though, okay, we are still pretty bullish. And as I've been saying for a while, once we get to this kind of earnings season, I believe what is going to drive this final blow off top move is, of course, continued beats in the earnings, continued expectations getting smashed, and Meta kicking things off here by massively beating the expected earnings results. You can see this giant green candle here. 9% for one of the Mag 7 is nothing to be sneezed at. And I suspect this is going to continue for a few more weeks now and really help to drive that final blow off top moment into the end of the year. And for Bitcoin, I believe we're going to continue to see much higher prices over the coming weeks and months as well. We've got the hash rate just hitting 1 zettahash per second. Okay, so I mean, look at this, absolutely wild. And think about this not only from a technical perspective, meaning this is more secure than ever, but also from a capital investment perspective as well. Okay, this is a lot of money that is being allocated to mining Bitcoin. This is a lot of people that are raising money, buying mining farms, operating them, running them, maintaining them, calling them, all of this kind of stuff. Okay, people would not be doing this if the network wasn't growing and if adoption wasn't occurring and if people didn't believe in the longevity of Bitcoin. So not only does this make our wallets more secure, but it also gives us a little peace of mind to suggest that it's not just us that believe in Bitcoin long term, okay? There are many others just like us out there. And when we take a look at the long-term holder 30-day net position change, it is just about flipping into red. Now, what this actually suggests is this is going to accelerate to the downside like this period right here, and that should be synonymous with a big final blow off top type push into the 4-year cycle top, right as we are noting the proliferation of the idea that there is no more bear markets, no more 4-year cycles, up only forever, lengthened cycles, all of that stuff. And honestly, I continue to cheer on that idea to proliferate, because the more it does, the more of a contrarian trade it's going to become to sell into the end of this year. And I would much rather be on the opposite side of the masses, selling there whilst everyone is laughing at me and saying things like, yeah, well, there's no more 4-year cycles, no more bear market. I would much rather that than see a bunch of people dumping their stack at the same time as me. So let's continue to cheer on that people are going to get that wrong. People are going to start to move the goalpost, both in terms of price and time. And let's also be continuing to cheer on the idea that this big move for Bitcoin is going to occur with a big red spill to the downside. Heading into the charts here, we're still long and strong and we're continuing to push. Not much more to say about that. VIX still trading below a 15 handle, okay? Volatility suppression continues to occur. Are we finally going to get down there? We've been talking about this for about 2.5 years, maybe slightly more on this channel. It looks like we're actually on the way down there now, doesn't it? So that's pretty cool. Gold is actually a very interesting area. Let's turn this indicator on, because number one, we've just entered the window for a cycle low. Okay, but number two, if this thing really is an A, B, C, D, E, which I think it is, then the E cannot trade below the C. So that should probably be the low here. We should probably look for this to start to reverse out of the timing window. And then if there's any credibility in this idea of mine that we're going to get a big push, okay? Maybe we have to pull this thing down a little bit. Maybe it's going to be more like this. But if there's any validity to this idea, then now should be the time to do it. And I'm also noticing there's a bunch of people on Twitter and on the internet in general that have started to look at this as a quadruple top here and started to bear post and say things like this is about to occur. Now, of course it could, right? It's a market, anything could happen. And if that's what we see out of this daily cycle, something like this, right? Daily cycle low, left translation, failure. If we get that, then I think we have to accept that I'm wrong in my idea that a big move like that yellow fractal suggests is coming for gold. But all it's going to take here is for this to simply find a daily cycle low above the C and then break out. And that's it. It's on like Donkey Kong. We're going to a much higher gold price. All of the miners should do extremely well. And in fact, I'll even be thinking about selling some of those miners that we put in the longer term accounts in the members section. I'm expecting silver to bottom any day now as well, turn around and then rip to the upside above $50. So it should be a pretty bullish end of the year for the precious metal markets. And I should think that Bitcoin is getting ready to break from this bull flag and rip higher as well. Something I noticed is really interesting, I think I pointed this out in the live stream, is we've done all of the upside move here in 3 candles and then just chopped around. Then we did all of this upside move in 6 candles and chopped around the entire time. So 9 out of about 40 candles here have just been doing nothing, chopping around sideways, which tells me perhaps what we could see here is another 3 to 6 candles. That's all it's going to take to get to wherever the top for this daily cycle is, and then probably we're going to have to trade down into a cycle low. I wonder if that's what we're going to see, and it would be pretty funny to me because it would give us a total of something akin to, let's say, 15 candles out of a total of 60 moving to the upside, which means we would have spent, obviously, the vast majority, about 75% of this entire daily cycle chopping around doing absolutely nothing. But that is what Bitcoin likes to do, right? It likes to chop around and do nothing and then just explode and leaving everyone in the dust. Also, long time viewers of the channel will know we've been absent of a weekly cycle on the Dixie for a very long time, but I think we found one. Okay, the indicator thinks we found one. We finally got a convincing breakout retest and resumption above those prior highs. Okay, is this the moment? I know it's long overdue. I know the people that are not familiar with me particularly think that I just can't call the dollar. And you've been absolutely correct in that assessment for the last few months. Okay, all in here, I did terribly at calling the dollar. But if that's a real weekly cycle, and I believe it is, then it should be go time for the Dixie. And that, contrary to popular belief, should actually be conducive to much higher risk asset prices over the short term. I know the noobs in the comments will be like, well, how can the Dixie run with risk? But that is actually probably what we're going to see here, just like we saw back here as well. So I hope that's the weekly cycle. Big support level that goes all the way back here, as you can see. Okay, it goes back forever, this support line in red. Joins all the 3-year cycle lows up as well. So yeah, I don't know, man. I think it could be a go time for the Dixie, and I think that will also, believe it or not, drag things like the precious metals, Bitcoin, and the stocks up, even though that sounds incredibly counterintuitive. And the bonds continue to look heavy, don't they? Or I should say the bond yields continue to look heavy. So tops are a process, trend changes are a process, but I do believe that's what we're seeing here. I don't believe we have got higher yields over the coming weeks and months ahead of us. I think once this tell that to the bond market squiggle continues to play out, again, that will be more fuel for the fire for the blow off top before ultimately these yields move so low that the Fed is going to be forced to cut. And then, of course, the big question circles all the way back round to here, doesn't it? Are they going to be cuts into a recession or into normalization? So I'm your boy Camel. I hope you're doing well in life. I hope you liked today's episode. And until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game.